The modern global economy runs on a fragile, invisible web. Beneath every digital transaction is a massive network of undersea cables and data nodes. If that grid goes offline, the economy stops. A coordinated cyber strike on key infrastructure, or a massive solar flare, a geomagnetic storm, powerful enough to induce terrestrial electrical currents, can physically melt those hardware connections in seconds. When the main communication trunks fail, the collapse cascades. Internet service providers go dark, cell towers lose their uplinks, regional telecommunications networks drop offline globally. Without an active internet connection, the massive centralized data centers that authorize traditional financial transactions instantly shut down. Because traditional finance relies on these centralized physical servers communicating in real time, a total web collapse guarantees an immediate global financial freeze. The ability to verify who owns what simply vanishes. Globally, the consequences are immediate. Swipe a card or tap a phone, and the retail payment terminal simply stares back, entirely dormant. Visa, Apple Pay, and local credit networks cease to function. Your fiat currency technically still exists as an entry in a bank's database, but without the network to ping that database and confirm your balance, that wealth is trapped. It becomes functionally useless for buying a bottle of water or a tank of gas. Critics often point to cryptocurrency and assume that a purely digital asset would logically be the first casualty of an internet blackout. How does a digital asset engineered entirely from computer code survive the death of the World Wide Web? True financial survival in a blackout depends on how the network's architecture distributes trust and validation, rather than the physical form the money takes. We have seen localized versions of this already. During state-sponsored internet outages in recent years, local banks froze entirely, yet regional Bitcoin ledgers continued to process and update. This happens because of the distributed ledger. Instead of one centralized bank server holding the master record, tens of thousands of identical copies of the blockchain exist simultaneously on computers all over the globe. This visualization shows how the network adapts. Bitcoin nodes do not require a high-speed broadband internet connection to function. They solely require a basic communication layer to whisper data to one another. A single Bitcoin transaction is essentially just a tiny string of encrypted text data, taking up only a few hundred bytes. It is small enough to be broadcast through almost any medium. Because the data payload is so light, as long as humanity retains the ability to transmit basic information over long distances, the network remains alive and operational. One of the most robust fallback methods is high-frequency amateur radio. Ham radio operates as a decentralized communication system, independently of any corporate internet service providers. That tiny text string of a Bitcoin transaction can be mechanically translated into simple audio frequencies, much like an old dial-up modem converting data into sound. This diagram demonstrates the physics involved. Those analog audio frequencies are broadcast into the atmosphere, where they bounce off the Earth's ionosphere, a layer of charged particles in the upper atmosphere, and land at a receiving node thousands of miles away, bypassing local power grids entirely. There is also a secondary layer of redundancy operating above the atmosphere. Satellite networks, like the one maintained by Blockstream, constantly broadcast the entire blockchain back down to Earth. By piggybacking on the natural physics of sound waves and orbital mechanics, the network routes completely around terrestrial internet failure. The global ledger can survive a total blackout, but that doesn't mean an unprepared individual will automatically be able to access or spend their funds. Storing cryptocurrency on a centralized exchange carries the exact same physical server weaknesses as using a traditional bank. If their data centers lose power, you lose access. The required method to guarantee access is cold storage. This means generating and holding your cryptographic private keys, the secret alphanumeric codes that prove ownership of your assets, entirely offline. A specialized piece of offline hardware functions as an impermeable vault for these keys during a digital crisis, isolating them from any compromised networks. Holding your private keys on an offline device provides a mathematical guarantee that you maintain control of your wealth, even when third-party custodians vanish. Traditional bank accounts require constant, uninterrupted permission from a central server to function. Correctly stored Bitcoin is self-sovereign. It requires no external permission from a corporation or a government to exist, move, or retain its value. Standard credit networks are inextricably tied to fragile, easily disrupted infrastructure that can fail at a moment's notice. Aided by analog radio waves and satellite uplinks, this specific digital asset is engineered to outlive its native digital environment. True financial resilience requires a decentralized global network, but it also demands the active, physical decentralization of your own personal storage.